Hello everyone, I'm James. Welcome to the channel. We're going to be talking about natural gas. So let's have a look at the COT report. This came out on the 31st of December, so it's a little bit old already, but it's the latest report. I want to have a look at what's going on with commercials, producers, managed money. Those are the ones that tend to go with the direction of the trend, and you can see there's some pretty good positions on here. Commercials are 562 long, 451 short, so quite high numbers, but notice the additions and subtractions. Apart from being pretty much the same sort of level, they took 4,500 off the long side, added 5,000 onto the short side, but pretty much balanced. Producers, on the other hand, a little bit less in terms of overall sizing, 188 long, 236 short, a little bit lean to the short side, and adding some more to the short side. So perhaps producers are eyeing this moving down. Notice that the chart above us, we're above the sort of seasonal average, and the seasonal average drops into this coming month and the next month. Managed money, those who are managing money, funds and institutions, 162 long, 166 short, almost perfectly balanced. Look at the reductions. So actually reducing size, just sort of on both sides of the market, getting out of the market, generally losing interest, 13,000 negative on the long side and 13,000 negative on the short side. So really sort of undecided, if anything, but perhaps the producers giving a hint that we could be leaning slightly further towards the short side overall. The non-commercials, 199 long, 317 short, and subtracting a little bit from both sides, 14,000 and 16,000. So both actually reducing, both sides reducing positions. Swap dealers, the hedgers, not much size on actually, 193 long and only 34 short. So leaning to the long side, in other words, expecting the market to go to the short side, but adding more to the short side. So again, a little bit of a confused picture. Not surprising considering you're trading at $3.50 or 60, right at the top of the overall range for natural gas and above the seasonal average, and with the view that the seasonal average will, the seasonal average drops as we go into this next month. And then other reportables, these are generally retail traders, 37 to the long side, 151 short, and adding quite a lot more to the short side, 3,000, but reducing from the short side somewhat, 3,000 negative there, only 83 negative on the long side. So quite heavily short, but reducing those positions somewhat. Not a lot, but just a little bit. So bit of a mixed bag. However, if we look at the commercials, the producers that manage money, just to reassess, commercials pretty balanced really, adding slightly more to the short side. Producers pretty balanced as well, but also adding more to the short side. Whereas the managed money, pretty balanced long and short, and also reducing size overall, both on the long and the short side. So not a very clear picture from the COT report. Let's go and have a look at the charts. This is the Henry Hub Natural Gas Futures at Black Bull, the broker where I trade. There's a link below if you're interested in trading at Black Bull. You also get free TradingView charts if you do that. This is a hedge account, so I'm able to buy and sell simultaneously on the same account, which you may not be able to do in the US and Canada and certain other countries. But this is where we are. Now, what we've got is this longish term trend line now. It's starting to develop quite, it's been going on since October, so it's a pretty decent trend line. We've got this long-term trend line now, which is developing underneath the price action, going all the way back to October 2024. So it's a fairly long trend line now, beginning to develop. But what worries me about it is that we've had one, potentially two, three, four, five, six, call it 6 or 7 touches of the trend line. And we've got the price action angling downwards after that big spike high. We're fully hedged on this. In other words, we have no directional bias currently, although we have a long position and we have a short position. And that's the way I prefer to trade. If you want to know more about hedging, particularly on natural gas, I've got some videos up on this channel as well, which you can search for. So where do we go from here? I don't know. It really all depends on how this week closes, because if we look at the weekly chart, let's go to that very quickly. You can see we've got this enormous spike high week, big bearish engulfing candle. In fact, the week before that was a piercing pattern that was actually invalidated initially by this big spike up, but then sort of validated by the continued move down. We didn't close above that big, I called it a piercing pattern. It's a dark cloud cover candle pattern with a higher high closing more than halfway down the previous bullish candle's body. So all in all, a pretty bearish picture, and that's this week just resting on that trend line. So really, honestly speaking, this doesn't look particularly good for natural gas longs, despite the weather, despite the Ukraine transit deal that fell through or was reneged upon or dismantled, whatever the story was. But that's where we are. So I don't know. We're going to continue to remain hedged on this. Let's go back to the daily chart. So I don't know. We'll continue to remain hedged on this, and let's see how this plays out. Let's go back to the 4-hour chart. You can see not looking particularly convincing. Yes, we had a big bullish candle which went up through all the moving averages, bouncing off the trend line on the previous 4-hour candle. This one just sort of dripping back in again. So it's pretty difficult to determine the next direction, and I suppose a lot of it will depend on whether we can actually make some moves up today. Being Wednesday, we've got the storage report tomorrow, and obviously the weekend coming up. We're still some way away from the next rollover. So that's natural gas, and I will try and update once we unhedge this position. But for now, I'm just remaining cautious and hedged, bearing in mind that there is no clarity from the COT report. It is a week old or more at this point. And also bearing in mind that we're above seasonal highs and that the seasonal curve going into January and the early part of February is actually downwards. So the overall sort of price action is probably expected to move lower going into coming days, but we're also above that curve. So all in all, quite precarious. Remember, $3.50 is the top of the range for natural gas most of the time. $2 to $1.80 is the bottom of the range for most of the time. We don't want to be committing to long positions right at the top of the range. We're in not only the ouch, it's getting expensive part, but really quite, right up into the Saks Fifth Avenue type pricing on natural gas right now. We want to be buying and committing to long positions like we have been doing right down closer to $2, the bottom of the range. Natural gas is a very ranged market with occasional violent moves outside that range, not very much below $2, but sometimes once we get up through $3.50, $4, as you'll see. Let's have a look at that chart quickly, and let's switch this over to a weekly chart just to illustrate this. So that's where we are now at the 350, 360 level. Remember, I did say that the 200-week moving average, this purple line, would perform some sort of function in resisting this price movement higher. Despite that dramatic news on potential weather, polar vortexes or vortices, correctly to say it, despite that, we've remained under the 200-week moving average. But let's have a look and zoom back out. You can see, although we do get violent and dramatic and huge moves outside and beyond the $3.50 to $4 level. Okay, this chart's not going back far enough. Let's go to the natural gas futures at the NYMEX. Right, that's better. This is the NYMEX chart, which goes back much further. So that's where we are now. There's the 200-week moving average, same sort of chart that I showed you on the Black Bull chart just now. But you can see most of the time we're under more or less the range that we're at the top of now. There are occasions and sometimes quite extended periods. For example, this was related to the Ukraine war and also what was going on in Israel and Gaza. But most of the time you can see this is the sort of the top of the range. We have to be very careful when we're here right now. So that's not to say we can't follow this trend line and keep on moving higher and get one of these sort of magnificent, huge moves up in natural gas. But these are a rarity and not an exception to the rule, really, and not the rule. As you can see, most of the time we languish down at these sort of levels, and actually overall there's a descending general downward trend line. So don't expect this to happen, these big spikes up to $7, $8, $10, $12 too frequently, maybe once every decade or every 5 years, something like that. Let's go back to the day chart. Whilst we're on the Henry Hub, let's have a look at a couple of other things. When's the next rollover? Let's have a look at the rollover coming up. Remembering my broker Black Bull generally tends to roll over a week in advance. So the 29th of January, we roll over from the February contract to the March contract. So there's still quite a lot of time to go. We're on the 8th of January right now. Need my spectacles. So that's where we are. Precarious trend line, I'd say, but it's still holding. And I want to go back to my chart at Black Bull. So this is the same thing over at my broker at Black Bull, same as the Henry Hub from the NYMEX, except the rollover dates are slightly in advance, and also you can't see the rollover on the chart. It's normally represented by a single bar. So that's where we are, trading at 3.59. My consideration is perhaps to wait for a little bit of a pullback from this last sort of 4-hour bullish rally, pull back down to the 20-period moving average. Let's zoom in down there, and that would take us back to about 3.53, 3.54, which happens to be exactly where my hedge level is. So if we do get that, I might consider, and I've already sent a forenote or a warning to my private group, that I might take off the short side of the hedge, and let's see if we can get a little bit of a bounce from this trend line and another continuation of this move up. You never know when these massive moves are going to start and what they might be triggered by, but it would normally be severe weather or geopolitical concerns. We have both of those going on at the moment, so perhaps, just perhaps, both of those will play into effect and start forcing this price higher. It also all depends on what happens with this polar vortex and whether it really is going to carry on and transpire. Haven't had a look at the weather report in the last hour. Don't know exactly what's going on, but it seems like it may not be as severe as people thought. So that's natural gas, folks. Hope you enjoyed that. We'll carry on with WTI. We're still short on WTI, and that's where we are currently, moving up into this 200-day moving average. We've taken a short position there. We've got loads of space to add some more on still, and I'd be very interested in adding more at about $75 and perhaps even up to the top of this order block and into the sort of $78, $79, maybe even $80. I don't think that's the most likely case though, and I think we may just probe the 75 level, maybe slightly above, maybe 78, just around about that 200-period moving average here on the day chart on WTI oil. You can see if we look at Brent crude, which is always a good thing to look at, sort of in conjunction with what's going on, we're still also below the 200-day moving average and the order block. This could reach up into 78.5, 79, and maybe up into the order block, even up into the sort of 82, 81 to 82 levels. So keep an eye on that depending on what you're trading. We're also long on URA and UEC, just bumping around on those. I want to have a look at one more thing, and that's Bitcoin. Very, very concerning here on Bitcoin. For the first time, I'm actually a little worried, only because we closed above, and very convincingly above, the $100,000 level just for a day, performed a tweezer top with a bearish engulfing candle, and we're moving down. We're holding on to that middle level there at 96,000 and the bottom of this range where I shall be forced to hedge if we close, and I've said this in the last video as well. That's always been my line in the sand for the last couple of months. And if we do close beneath that level on a daily basis, perhaps a weekly basis, I might not be so eager to jump into hedging, but certainly on a weekly basis, but perhaps on a daily basis, we might consider hedging some or all of the Bitcoin longs that we have on. Right, having a look at NASDAQ, S&P, and a few of the other stock names, mainly the sort of tech names here, a few that I'm watching. NASDAQ, we went short right at the top there at that trend line. Let me zoom in very quickly to NASDAQ just to show you. I have no idea which way this is going next. Seemed like a reasonable place to sell. We've got every single one of these tops so far, so I'm pretty pleased with that. We also got a long from the bottom over here, so we've traded this very volatile and choppy range quite successfully, if I might say so myself. But we're now short again, and hopefully this will continue down. We're forming a sort of a descending triangle here, and if we do close beneath these lows, roughly, well, 20,800, just below 21,000, then I'll consider adding to my short side on this trade and looking for that to move down. That was all sparked off by some very volatile movement in NVIDIA, which rallied up to a new all-time high prior to the market opening yesterday. And actually, even though we opened at a new all-time high, having been higher in pre-market, it was only fractionally higher than that previous all-time high, followed by this dramatic collapse. The move from the high in pre-market down to the bottom yesterday, and we closed right at the bottom, was almost 10%, 9.57, 9.97. So a massive move down in NVIDIA, which after having dragged the market up, then pulled it quite rapidly down again. We didn't see the same sorts of things on the other Magnificent Seven or tech type stocks. MicroStrategies fell off, of course, due to Bitcoin, as did Coinbase. This is one I'm looking to buy in some time to come down at these levels. I'm not going to go into that in too much detail. Those are the levels I'm looking to buy Coinbase at, but we followed down as in line with Bitcoin and the other cryptos that you can trade on Coinbase. Apple didn't move very much at all, almost nothing, up and down a little bit. And the other one that we're long on, in fact, sort of a hedge against the short NASDAQ, is Tesla. And that moved down quite a fair bit as well yesterday. That's our entry level there at around about $400. We're now just under $400 at $395. Same in pre-market, hasn't really moved much. So a bit of a mixed bag, but our main trade on here, we're also short on the German 30, by the way, at that red arrow. That one looking a bit iffy too. There's the top Bollinger Band. Let's quickly have a look at this one. We do have a nice channel that we're trading within. We reached the top of the channel a few days ago, fell back, and we've sold now again, looking for this to move down. There is a bit of penetration or extrication of the channel down here at these bottoms, but it's basically a channel that the top's held pretty well for quite some time. So let's see how we go on German 30. Now, going across to currencies, I continue to think that the dollar has a chance of weakening into 2025, but we're not seeing it just yet. We did see a bit of a pullback in the last number of days on the dollar index, and this is what it looks like. Just pulling back to the 20-day moving average though, so not very convincing. Although it looked like it might get going, we made a fractionally lower low below that swing low, but quite a rapid bounce thereafter, forming a tweezer bottom there and moving up. I don't know where we're going on the dollar index in the short term, but I do think we have a chance of seeing some dollar weakness going into 2025. All sorts of reasons for that, including collapsing fiat currencies against the US dollar all over the world, including some massive trading partners. Just generally, dollar strength is making it very difficult for some of the assets to move higher. Of course, money supply comes into all of this as well. It's a very complicated equation, but generally, I think that the dollar will probably find a little bit of a sell-off during perhaps the early part, the first quarter of 2025, and we're ready to catch that. So we're long on the euro, long on the pound, although we are hedged on the pound, and we're also short on the dollar yen, hoping for this top to actually hold here on the dollar yen. We had this beautiful attempt at a top. We now moved fractionally higher. Actually, I thought this might be a sort of a Wyckoff spring. I know that we've got some big wicks below us and it's all looking quite bullish, but we moved to a high above that previous swing high, rejected from there quite sharply. Doesn't look like it on the stay chart, but if we go to the 4-hour chart, you can see some of those big moves down over here and trying to actually sort of solidify that reversal. So far it's not working out, and we may have to continue to sort of hedge these and fiddle around with them. Very, very annoying right now. So that's it, folks. I hope you found that useful. One more page I quickly want to look at, that's the softs and the grains. People are asking me about cocoa quite frequently. We're still fully hedged on cocoa, looking for this sort of path to form at some point. I haven't removed my hedge from this yet. I'm not convinced that we're going to break down. If we do break back down into this megaphone pattern and hold in there, get down through some of these levels, I'll progressively start to remove that hedge and allow the short side of my trade to carry this into profit. We've got a long way down. We could go on cocoa potentially all the way down to these trend lines. It looks ridiculous right now being right up at this level, around 11,500, but we should be trading closer to 2,000 or 3,000, believe it or not. So, make of that what you will, but there's our hedge position. We're 50% hedged. This is coming back slowly. So in other words, we're balanced to the short side, but not with a massive trade, and we are 50% hedged. So coffee, we're also short. Just quickly have a look at these. I'll cycle through them as we go. Just looking to for this to break back into the channel. We broke down through this first short-term trend line. There's our short position from quite a long time ago now, going back into very late November. So we're not much out of the money on that, but I don't know which way that's going to go. A couple of other things. Corn, we're looking to take some profit or hedge once we get into this blob. We're very, very close now at around about 4.53. We're long from about 3.95, so that'll be a good 10% profit on corn. What happens thereafter, I don't know. We're also long on cotton. I always point cotton out to you. We're stuck between these three lines. Still currently bumping along the bottom. I'd like to see us get above the red line, the halfway mark, hold above there, then the green line, and there's plenty of space for cotton to move much higher. We're right down at pretty low levels at the moment. Same sort of thing with wheat. Let's have a look at that too. And once again, the breakout pullback trade, which started over here, we got long there, we got long there on the hold above these highs, and we've just slumped back down again. We're still not below the recent low. We're still below this trend line though. If we do get a break up through that trend line and up through that swing high, crucially, at around about 600, 596, and then above this level here, and progressively as we move higher, if we do see a rally in commodities, which would necessitate a drop in the US dollar for commodity prices to pick up a wee bit. Of course, all of these things are intertwined with the dollar and inflation and what the Fed's doing and the money supply and the bond market. So really all of this stuff just keeping the price of commodities pretty low. We're also long on sugar, and this one continues to be disappointing. We actually did take another long position. Let me just clone this and show you where that was, somewhere down here at the bottom. So we have now 3 positions on sugar, 2 quite high up and this one from here. I think sugar's got a good chance of moving higher as well. The sugar farmers would be very appreciative of sugar moving up if it does. But we're not at particularly high levels, and believe it or not, sugar price is also affected by the oil price. And despite the fact that the oil price has gone up, the sugar price has stayed down, which makes me think we could see further weakness in sugar. There's a complicated reason for sugar and oil being related, to do with sugar fuels derived from sugar, so which are substitutes for petrol, gasoline in some countries and some places. So I think that's all on softs and grains. Not much else to say on that. And then going across to VIX, Well, let's start with the rand pairs. Dollar rand moving higher, pound rand moving higher. We don't have positions on that at the moment. And then the VIX moving higher, of course, with those moves, big moves on the stock market yesterday, particularly down. But are we going to see a rebound in the stock market and the VIX falling off into this sort of path? I think this is possible still. I don't know, but we have no positions on VIX. And we're also long on TLT, and this has been fairly catastrophic for bond traders all over the world. We're not at these lows at 82.41 that we saw in October 2023, but we are approaching that level again. And no one actually thought that we'd see this trend continue in this direction. The bond traders will be in consternation about this as bond yields rise and TLT drops fairly sharply. We'll have to decide what to do with this, but until we get down to that level at about 82.50, there's nothing to do. And we'll probably add our final tranche on as we get closer to that level, if we do, and if we don't bounce up from where we are at the moment. Hope you enjoyed all that, folks. Have a great trading day. It's been quite a long video. I'm going to try and divide it into a natural gas video and then the rest, but there will be one video with all of it in it at the same time. Good luck for your trading. If you enjoyed this, please subscribe, like the channel, press the notification bell, tell your friends, and help support the channel. Be much appreciated.
NATGAS kings, we trade for grace. It'll make us smile, lights up the place. Market swing, but we hold our base. Double bomb strong, we're in the chase. Come on, click and clack that online race. Charts go wild, but we own the space. Resistance broke, no time to waste. Rocket fuel, let's up the pace. To the moon, to